There's a 90-day countdown that appears before every major currency collapse in modern history. Specific warning signs that show up in the exact same sequence, like clockwork. And right now in 2025, the U.S. dollar is showing 3 of the 5 critical signals. In 2008, Iceland's króna showed all 5 signals. 90 days later, it lost 50% of its value in a single week. In 1997, the Thai baht showed all 5. 87 days later, it collapsed 56% and triggered the Asian financial crisis. In 1994, the Mexican peso showed all 5. 62 days later, it dropped 46% overnight. This has happened 7 times in the last 30 years. And here's what should terrify you. Most people don't see the countdown until it hits 0. By day 60, it's too late to protect yourself. By day 90, your savings are gone. This is the story of how currencies actually die, why governments always deny it's happening until the day it does, and why the mathematical signals say the dollar is on the same countdown. And it's happening faster than anyone wants to admit. Before we go through the 3 currency collapses, you need to understand what currency death actually looks like. Not in textbooks, in practice. Currency collapse doesn't happen randomly. It doesn't happen overnight without warning. There's always a countdown. A sequence of 5 specific signals that appear in roughly the same order, within roughly the same time frame, 90 days from first signal to collapse. Signal 1 is foreign exchange reserve depletion. The government starts burning through its dollar reserves or gold to defend the currency. When reserves drop 20% or more in a single quarter, the countdown starts. Signal 2 is interest rate panic. The central bank raises rates dramatically, 3%, 5%, sometimes 10% in a matter of weeks, trying to stop capital flight. It never works. It just accelerates the crisis. Signal 3 is capital controls. The government restricts how much money people can move out of the country. Daily ATM limits. Restrictions on foreign currency purchases. When you see capital controls, you're at day 30 to 45 of the countdown. Signal 4 is foreign debt refinancing failure. The government can't roll over its foreign currency debt. International creditors refuse to refinance. Banks won't lend. When refinancing fails, you're at day 60 to 75. Signal 5 is the currency peg break or intervention failure. The government has been defending an exchange rate, saying 1 peso equals X dollars, or we keep the baht at X. When they can't defend it anymore, when they announce they're allowing the market to set the rate, it's over. That's day 85 to 90. Within days, the currency collapses. The pattern is mathematical. The sequence is predictable. And once you hit signal 3, the outcome is inevitable. Let me show you how it played out 3 times in the last 30 years. December 1994. Mexico was the model emerging market. NAFTA had just launched. Foreign investment was pouring in. The peso was stable at 3.4 to the dollar. President Salinas was hailed as a reformer. Everything looked fine. But beneath the surface, the countdown had already started. Mexico's foreign exchange reserves peaked at $30 billion in February 1994. By October, they'd fallen to $17 billion, a 43% drop in 8 months. The government was selling dollars to defend the peso, burning through reserves at $150 million per day. Nobody paid attention. Mexico said everything was fine. The reserves were adequate. But the countdown had started. The Bank of Mexico raised interest rates from 14% to 18% in a single week. They said it was preventive. The real reason, capital was fleeing. Investors were pulling money out faster than it was coming in. The rate hike didn't stop the outflow. It accelerated it. Higher rates signaled panic. If Mexico was raising rates this fast, something was wrong. By late November, $4 billion in capital had fled Mexico in a month. The government didn't announce capital controls yet, but they started requesting that banks limit dollar withdrawals. Informal controls. The first sign that they were losing control. Mexico had $30 billion in tesobonos, short-term bonds denominated in dollars, coming due in early 1995. They needed to refinance. International banks said no. Nobody wanted to lend to Mexico anymore. The foreign reserve depletion, the rate hikes, the capital flight, all of it signaled a currency in trouble. When refinancing failed, the peso was finished. But the government kept denying it. Mexico had been defending the peso at 3.4 to the dollar. On December 20th, They widened the band to 4.0, a controlled 15% devaluation. It failed immediately. By December 22nd, they abandoned the peg entirely. The peso went into free fall, from 3.4 to 7.2 in a single week, a 46% collapse. Savings accounts, pensions, wages, all lost half their value in 7 days. And here's what people don't understand. The 85-day countdown was visible the entire time. Reserve depletion in October, rate panic in November, refinancing failure in December. Every signal appeared on schedule, but the government kept saying everything was fine, until the day it wasn't. The tequila crisis destroyed the Mexican middle class and triggered recessions across Latin America. It took Mexico 10 years to recover. Let's jump forward 3 years to Thailand in 1997. Thailand was booming. The tiger economy. GDP growing 8% annually. Bangkok was building skyscrapers everywhere. The baht was pegged at 25 to the dollar, rock solid for a decade. Everyone thought Thailand was the next Singapore. But the countdown had already started. Thailand's foreign reserves peaked at $38 billion in 1996. By February 1997, they'd fallen to $32 billion. The Bank of Thailand was intervening daily, selling dollars to keep the baht at 25. They were burning through $200 million per day. The government said reserves were strong, but they were lying. They'd also entered into $23 billion in forward contracts, secret promises to sell dollars later. The real reserves were less than $10 billion. The countdown had started, and nobody knew. The Bank of Thailand raised overnight rates from 10% to 15% in 2 weeks. They called it defending the baht. It was panic. Thai banks were collapsing. Real estate developers were defaulting. Capital was fleeing to Singapore, Hong Kong, anywhere but Thailand. The rate hikes didn't stop the outflow. They crushed the domestic economy. Companies that had borrowed in baht couldn't service their debt at 15% rates. More defaults. More panic. Thailand announced measures to stabilize financial markets. Translation: capital controls. Limits on foreign currency transactions. Restrictions on moving money offshore. Banks required government approval for large transfers. When you see capital controls, you're halfway through the countdown. Day 53 of 87. The currency is terminal. Thai banks and corporations had $90 billion in foreign currency debt, mostly dollars and yen. They needed to roll it over. International creditors refused. The reserve depletion, the rate panic, the controls. Everyone knew Thailand was in trouble. Nobody wanted to lend. Without refinancing, Thailand couldn't pay its debts. The baht was doomed. Thailand spent $5 billion defending the baht on May 12th alone. They ran out of reserves. On July 2nd, they announced the baht would float. The collapse was instant. From 25 baht per dollar to 56 in 4 months. A 56% crash. Savings destroyed. Businesses bankrupted. The Thai economy contracted 10% in a year. But it didn't stop with Thailand. The pattern spread. Indonesia, Malaysia, South Korea, the Philippines. Every Asian tiger showed the same 5 signals. Every currency collapsed within 90 days of showing them. The Asian financial crisis wiped out $600 billion in wealth. And here's what people don't understand. Thailand's countdown was completely visible. Reserves fell for months. Forward contracts were public information if anyone looked. Rate hikes were announced. Capital controls were imposed. Refinancing failed publicly. Every signal was there. But everyone believed the government's denials until the day of collapse. Thailand today hasn't fully recovered. 28 years later, they're still dealing with the aftermath. Let's jump forward 11 years to Iceland in 2008. Iceland was the ultimate success story. Highest per capita income in Europe. The króna was strong. 3 major banks, Kaupthing, Landsbanki, Glitnir, had expanded globally. Iceland's banks had assets 10 times the country's GDP. Everyone thought Iceland had discovered the secret to unlimited prosperity. But the countdown had started. Iceland's foreign reserves peaked at $2.5 billion in early 2008. By June, they'd fallen to $1.8 billion, a 28% drop. The central bank was intervening constantly, selling euros and dollars to prop up the króna. The reserves were evaporating. The government said everything was fine. Iceland's banks were well capitalized. The króna was stable. But the countdown had started. The central bank raised rates from 12% to 15.5% in 3 weeks. The highest rates in the developed world. They said it was to control inflation. It was to stop capital flight. Foreign investors were pulling money out. Icelandic households that had borrowed in foreign currencies were defaulting. The rate hikes backfired. Higher rates made Iceland's debt crisis worse. More defaults. More panic. More outflows. Iceland didn't announce formal capital controls yet, but banks started delaying foreign currency transactions, requiring extra documentation for transfers out of Iceland, making it harder to convert króna to euros. The informal controls were the signal. They were losing control. Iceland's 3 banks had borrowed $120 billion internationally. Remember, this is a country with GDP of $12 billion. Those loans needed to be rolled over constantly. In August, international credit markets froze. Nobody would refinance Iceland's banks. Lehman Brothers was collapsing. Credit everywhere was tightening. Iceland's banks couldn't get new loans. When the banks can't refinance, the currency dies with them. Iceland's banks failed in a single week. Glitnir on September 29th, Landsbanki on October 7th, Kaupthing on October 9th. The government nationalized all 3. The króna went into free fall, from 63 króna per euro to 340 in 2 weeks. An 81% collapse. The worst currency crash in modern European history. Iceland imposed formal capital controls that lasted 9 years. The economy shrank 30%. Unemployment hit 10%. A developed Nordic country experienced a third-world-style currency crisis. And here's what people don't understand. Iceland's 90-day countdown was completely visible. Reserve depletion in June. Rate panic in July. Banking system warning signs everywhere. Refinancing failures in August. Every signal appeared exactly on schedule. But the government kept insisting Iceland was different. Our banks are strong. Our economy is stable. Until the day everything collapsed. Iceland today still hasn't fully recovered its pre-crisis GDP per capita. The psychological damage remains. And here's what should keep you awake at night. The U.S. dollar is showing 3 of the 5 signals right now. Stage by stage, let me show you. The U.S. doesn't hold foreign currency reserves. We print the reserve currency. But we can track dollar demand through other countries' actions. In 2024, central banks sold $200 billion in U.S. Treasury bonds, the largest annual decline on record. China's Treasury holdings fell from $1.3 trillion in 2013 to $775 billion in 2024. Japan reduced holdings. BRICS nations are diversifying away from dollars. This isn't reserve depletion exactly, but it's demand destruction. When other countries don't want to hold your currency anymore, that's the first signal. Partial check. The Federal Reserve hasn't gone into panic mode. They're managing rates carefully. But watch what happens when they're forced to choose between supporting the dollar and supporting the economy. When they have to spike rates 5% in a month to defend the currency, that's signal 2. We're not there yet, but we're closer than people think. The U.S. doesn't have formal capital controls, but we've seen early moves. The U.S. has $36 trillion in debt. We refinance trillions every year. So far, auctions are successful. But watch the trend. In 2024, foreign buyers purchased the lowest percentage of Treasury auctions in 20 years. Domestic buyers, primarily the Federal Reserve, had to absorb more. When a Treasury auction fails, when the U.S. government can't sell its debt at reasonable rates, that's signal 4. We haven't hit it. But the foreign demand is declining. The dollar isn't pegged to anything. It floats freely. But there's an implicit support level. If the dollar starts collapsing against other currencies, the Fed would intervene, probably by spiking interest rates or coordinating with other central banks. When that intervention fails, when the dollar keeps falling despite emergency measures, that's signal 5. That's the endgame. We're not there. But signals 1 through 3 are appearing. 3 signals showing. 2 more to go. The pattern says once you hit signal 3, you're 30 to 45 days into the countdown. We don't know exactly where we are, but the sequence has started. Since 2020, we've accelerated toward every signal. Printed $6 trillion, the fastest monetary expansion in U.S. history. Saw foreign treasury demand decline at the fastest rate ever. Watched BRICS nations develop dollar alternatives. Implemented more financial surveillance and control infrastructure. We're not slowly approaching the pattern. We're rushing toward it. In Mexico, the countdown was 85 days. In Thailand, 87 days. In Iceland, 90 days. Once all 5 signals appear, currency collapse happens in 3 months or less. Not years. Not decades. Months. The dollar hasn't shown all 5 yet, but 3 are visible. And the historical pattern says when 3 appear, 4 and 5 follow quickly. Within a year. Maybe less. 3 times it happened before. Mexico lost half the peso's value in a week. Thailand triggered the Asian financial crisis. Iceland experienced a depression. 3 currencies that showed all 5 signals. 3 governments that denied it until the day of collapse. 3 90-day countdowns that wiped out savings, destroyed economies, and proved the pattern is mathematical. The pattern says the dollar is next. Maybe we're different. Maybe the reserve currency status protects us. Maybe we can avoid signals 4 and 5. But Mexico thought they were different. NAFTA would save them. Thailand thought they were different. The tiger economy was unstoppable. Iceland thought they were different. Sophisticated Nordic banking would protect them. They were all wrong. The math says when 3 signals appear, the countdown has started. The pattern says when 5 appear, you have 90 days. And history, which has watched currencies die the same way over and over, says the dollar's countdown has begun. Maybe you have years to prepare. Maybe months. But the signals are appearing in sequence, exactly like they did before. And when signal 5 shows up, you won't have time to react.